This meeting minutes of the meeting held on the 22nd of September 2020.
So moved.
Second. Moved Councillor Hopkins, seconded Councillor Ropey. No comments on the minutes as recorded. Through, so just coming through the minutes to the end. So right, so no comments. All right, so I'll put that resolution to the committee. All in favour, please say aye.
Aye.
Against? Declare that carried. Next item of business is the memorandum reports. Firstly, the pre-audit draft annual report for council for the year ended 30th of June 2020. So author Mr. Wells, authoriser Mr. Hope. So which of you two would like to make any further comments on the report?
I'll start.
Thank you, Mr. Hope.
Thank you. So this is the actually the pre-draft audit report. Is complete as far as we are concerned. Officer level, it is now being worked through by the team from Audit New Zealand. They've provided some feedback that has been incorporated into this draft version, and they'll just work through to finalise it to the revised reporting deadline that is allowed for this year. Really, in the memo, there is probably far more commentary and explanation than we would normally provide for the annual report. Hopefully, much of it is just a repetition of the issues and items that have been included in previous Performance Audit and Risk Committee reports, reporting on the variances we've had during the year. But it really just does highlight the cumulative effect of a number of quite significant negative variances. So it's not only the impact of COVID, the non-receipt of some government funding, but also the impact that even a slight change in the value of the assets and the flow through into depreciation and other numbers. When you have such a large asset base, any small change has a real impact in the income statement, and that's really what we tried to highlight in the first item on page 4. We are seeing the impact of the ongoing revaluation exercises we undertake with the assets. It always means that at each time a revaluation occurs, they look at the life of the asset, and if it's still in service, then at least it has to have a minimum life. If we're proposing to replace it in a very short space of time. So that's why we have, and we will continue to have, sort of a reasonable level of write-down of assets each year as those items get replaced. But the size of that change shouldn't really be viewed in terms of its impact on the income statement. More needs to be viewed in terms of the size of the revaluation we see each year in the large asset classes. So in this case, what we've moved $40 million in property and an even greater amount in roading. So we are a very asset heavy organisation that has an impact. And then further we go through, it's a bit more detailed explanation of the items. But overall, it was a challenging year. The council is still in a very sound position. So, really open to any questions, unless there's anything you'd like to add, Mr. Will.
I just think you've done a wonderful job.
Yes, so questions on the report in general, any items inside it?
Yeah, thank you, Mr. Hope. Just a comment, in your overview, you do state quite correctly that the variance between the surplus of 1.67 million in the annual report and deficit of 3.62 million shown in this report, it's a turnaround of 5.29 million. So the detail you provided has been trying to clarify where that turnaround, get that deficit, or that change is originated from. So thank you for all the information you've.
Yeah, and I mean it was really to well, as Councillor Hopkins has asked in the last several meetings, do we need to worry? And hopefully providing this level of information gives you some assurance about the reasons for the changes, that many of them are one-off, Some of them are a bit systematic, but hopefully tried to explain that. So it gets down to probably a far more reasonable amount in terms of the size of your organisation and the level of turnover.
Does the asset value adjustment fall of negative 2.32 million? It's not a cash. It's a paper transaction, not a cash transaction. So yeah, Councillor Percival, you can
I did it there. I just want to explain the 700,000 of PGF funding. To me, it's a bit like the Emperor's New Clothes. It was never there. So how could it was never there?
Mr. Wells?
We had a project in the annual plan for construction of a building at the airport that was going to be of sufficient size that it was expected it would attract PGF funding of 700k. The building was later, the design, the size, everything about it changed, and it either was no longer applicable for that funding, or it was decided to apply for that funding in other ways. But the budget included the funding. The funding was not received, so it is a variance.
I seem to recall us approving funding to do that project that you just explained, but I don't recall that including money that was never there.
I think
we're trying to explain the difference between what was included in the annual plan, which was the $1.6 million surplus. Half of that surplus was essentially that PGF funding that would come in. So that would come in as income, but the cost would be a capital. So it had a direct flow through into the bottom line budget.
I think, Mr. Chair, there was the original project which included the desire to get some PGF, foolishly, and so that was in time to go into the annual plan. That never eventuated. We rejigged the project so that it was a smaller project, and we approved that one subsequent to that. So there was two stages.
That's right.
The auditors covered all that quite well. They were happy with that.
Yeah, no, they'll be happy with it. I mean, we're explaining it. We didn't receive the funding. It was reasonable to include it in the annual plan at the time, but didn't eventuate.
These are some of the intricacies of local body accounting. That's first one. A bit different to your farm accounting. So just going down in the explanation chart on page 16.
So
detailed commentary.
Is this the committee or the annual report? The latter. And I'm wondering if it should be informed.
What page do you want?
It should be in the
I'm
agenda.
looking at the report itself.
No, I'm in the agenda. Page 16 of the agenda.
Okay. Can we maybe ask questions about the agenda first and about the report later, please?
Yes.
So what page are we on? 16.
16, yeah.
Sorry, thank you.
Detailed commentary. There's commentary there, giving details in each category how what drafting the report result is, as opposed to the previous projection, budget, and the drafting report variance. So the right-hand column is the variances, so you can see the pluses and minuses there. There are some quite large numbers. And on page 17, expenses, like just the depreciation, which is once again a non-cash expense, plus 919,000 due to the higher revaluations that Mr. Hope had mentioned. So, Jim, you've got your
See, the difficulty I have with reading this is this just a vast bloated exercise in counting smoke and mirrors that doesn't actually matter? And if you look at things like page 14, where you explain that there was a budget for dredging which cost 331 and was comfortably under the budget, but because the annual plan had 90 and we hadn't voted for the carry forward as yet, it's going to show that the ratepayers are out of pocket by 241 $600,000. So, I mean, essentially that's nonsense, isn't it? In a sense, I mean, it's a piece. Do you know what I'm saying?
So I think what we're trying to do there is explain that we're working with one budget for the annual report and one budget throughout the year for monitoring our performance in terms of what council has approved for financial budget purposes. So council takes the annual plan, adds to that the carry forward budgets, which we discussed this morning, and that becomes what we term the living budget, and we monitor that during the year. But legislation requires that we match our actual performance against the actual annual plan at year end. So it does remove the carry forwards. It means that we are budgeting. So if something was not planned in this year but was done in this year, then it will affect the result. That's it. You're right. There is a degree of lack of sensibility about that.
But, sorry, can we just look? What I'm really asking is, and Paul said before, you know, do we need to worry? Because, I mean, long term, you can't keep on raking up $3 million losses every year. You've either got to make more money or cut your spending, if that's real money. But exactly, that's the point. What I'm trying to work out here, why have we suddenly had to write off a whole bunch of stuff in the Three Waters area to the tune of 1.4 million?
So that's where Paul started his discussion on this, was around the way that we value assets triennially. The valuation is largely along the lines of the asset will last for a standard period of time, when in fact during that period we know we're going to replace it. So it shouldn't carry that value.
So what you're saying is that we're taking out some pipe 2 years from now, we have to write it off now.
Well, we should write it off over those 2 years. So either we give it the full value but write it off, or we give it the value of 2 years worth of depreciation and write it off.
Problem is, even if we know we're replacing it in 2 years, they're saying it's still got a service life, so it's going to get revalued, its value get increased, and you're going to have to write off more when you do get around to replacing it.
No, seriously.
That's how it works.
Well, I think, Mr. Chair, I mean, this is why we say what's the effective surplus or deficit, because you have a lot of these extraordinary items which are really only pop entries, and you know, for most of the time they're there. Yeah. And it's, you know, we do have this valuation which does recognise the value of our assets, but sometimes questions come in and that all gets consolidated into the final result, which then actually is not necessarily meaningless, but there's a lot of it doesn't have meaning.
Quite correctly, Kutcher, and like just down the bottom of page 17, where the revaluation of road property assets gain of 38.711 million and a roading gain of 45.785 million. Total gains a year of 84.5 million, which is all on paper. So it's just, once again, a lot of this it is accounting.
But it will,
Mumbo jumbo.
Those revaluations will affect what we ask people to pay us for depreciation unless we change the rate. So there's a real consequence there.
Yeah.
May I just ask 2 more questions very quickly about specific things? On that same page 17, why are we referencing the unbudgeted impact of mould remediation and gathering refurbishment 453, when I think the next report indicates the whole thing was covered by a loan of 663,000?
Because
if the loan's here, it can't be unbudgeted, can it?
no, it's so in the annual plan, there was no hint that there would be a requirement to have any treatment for mould and closing the gullery and all that sort of jazz. Even if we during the year voted in additional budgets to deal with it, we still have to wipe those out and go back to the annual plan budget.
Now, one last question on that same page. And this is a question for us, really, the Performance Audit Risk Committee. How can this committee in future stop the unbudgeted expenditure of a sum of $223,000, wherever it is, for the use of external resources in the building and planning units. I mean, that is a management matter or a governance matter, I would have thought. But that amount of money to be spent without anyone saying, yep, you can do it, is a failure somewhere, surely.
Well, I think in response, Mr. Hopkins, Councillor Hopkins, I think there is, we've known that there is a shortfall in resources in that department, and they'll be relying on using external contractors. So the question then is, why was that not budgeted for?
Well, exactly, that's my point.
Well, it wasn't budgeted for in the annual plan. So
Okay.
you basically, that matter has been
So
raised in
it all comes back.
decisions of council during the year.
Unfortunately, it's a fact of life that we don't, you know, we anticipate a certain level of work, certain level of fee income, certain level of remuneration to go out to carry out work, and then it gets busy and or quieter, can be the other way, but generally it tended to get busier. So yeah, there's extra costs to cover that, and you know, we do rely on staff to really make sure they're doing that as efficiently as possible, but you know, when you've got more work on than expected, that's just the way it is.
And what you're saying is the report is owned by the plan. If it wasn't in the plan, it has to be explained away.
That's right. Yep. And even though the plan is a very detailed plan,
Yes.
and there are always things that don't happen as per the plan. So that's why there are pluses and minuses, and that's why the team already are trying to point out the major pluses and minuses to explain where the turnaround from a budgeted surplus is around to an actual deficit. So it is very complicated for even for an accounting person to understand. It's a lot of detail in there. So, Councillor Percival, did you still have your hand up here? Will I come back to you or not?
No, you didn't.
Okay, now it's your chance.
My question was exactly what Jim asked regarding that unbudgeted use in the regulatory area. It doesn't make sense to me, but it does make much more sense to me now it's been explained to me. So I don't believe you can spend that sort of money without having some reference back to the council, because that isn't an over expense. The second thing was the unbudgeted impact of mediation in the gallery and the museum, 453,000. Now I seem to recall when that all occurred and everyone was fussing and going on and building scaffolding. I'm positive that was to come from the depreciation fund, because I remember questioning at the time where there was that money coming from. So I don't understand how that can be, again, unbudgeted. Oh, there you go.
Mr. Wells might explain the two sides.
The important thing is that the cost hits the operating result. How we fund it is an internal mechanism, which means that so we've now set up loans which will be paid by ratepayers over the next 20 years, let's say. It doesn't remove the fact that the cost was incurred today and so has to be included in the operating report, because the loan funding doesn't form part of the revenue or any of the other aspects of this report. The paying of the cost will be over the next 20 years if it was loan funded. That'll come through rates.
Guys, you're on the farm and you borrow money from the bank to build a new bullshit. That money from the bank is not income, but expenditure is recorded in your annual accounts as money spent. So your debt to the bank. I hope that's clarified. The two sides is that there's a spending of the money and where the money comes from, is what Mr. Wells is saying.
I might go and stand that puddle of mud down in the park.
Spending the money
If it's as clear as that, it would be on the numbers. There you go. Thank you very much for that.
Sorry.
Are you any the wiser, Councillor?
Absolutely not.
We did our best in.
I will contemplate this evening. Jim.
Okay, so is there any further serious questions on the three audits?
They're all serious.
Just
Yeah, okay, so yep, so on that.
Just very quickly on the report, there's a couple of, first of all,
So we go down to report ourselves, the
No, we haven't even proofread it yet, Jim, so
No, that's, okay.
that's to be done.
That's fine. Look, just a couple of very quick things, and these are matters of meeting, not, what is,
It's on the attachment to the.
no, this is the draft annual report, which I thought was what we were now looking at. Have I got that wrong?
Yeah, 28, yes, yeah.
So it's a historic thing. Second paragraph, as part of, these are just meeting matters. As part of the meeting council's obligations around fostering contributions and decision-making, council representatives, I would just suggest that should be historical, say also met with. Just a suggestion. And going back to page 12, I think. I just think, yeah, some of the wording here, I don't think, I mean, if you look at affordability, it's just clumsy, and also we carefully balance the needs and wants of our community responsibly bracket prudent close back. And number 3 here, you see alternative funding sources where possible to supplement rather than complement. But I mean, if you're happy to have a bit of suggestions as to wording on those things,
Yep.
Submit.
You can send them my way.
Fine, do you send them to Mr. Searle and he'll.
Look at them.
You'll consider with you.
So on that attachment, which is the annual report, any other comments, questions on that 175 page document?
There was one thing I was going to highlight. It's actually on page 23.
Back in the agenda. So
I know, in the annual report it's got the essential services benchmark. This is one that central government likes to keep beating us up about. Essentially, this is how much of your depreciation did you actually spend in the relevant year. We were under for a number of years when we were doing the drinking water upgrades, but you can see now that we're well into the renewal phase of spending and are actually spending well over the annual depreciation in terms of renewing assets. So
yes.
It's the problem when you have 30, 40, 50-year timeframes. Looking at a 5-year window can give a bit of a deceptive picture in terms of how well an entity may be looking after the assets it's responsible for. We've certainly been spending very heavily in that space over the last 4 years.
Yeah, that's wonderful. 138, 147, 138, 141. So
page 23.
Well above the 100% benchmark.
So you're talking about the 3 oranges at the top, are you?
No, I'm talking about the
It's a
chart on
another
the
page.
page. We're well above the 100% line that's seen as a minimum spend by the Crown and some of its agencies.
How do we explain to people who look at the top graph and say, look at this, the 3 oranges, look, we're 52% or sorry, 96% lower than we should be or whatever. How do we explain those failures to balance our budget?
Well, we're just using reserves that we've accumulated to actually fund some of the spending that we're undertaking. It's really pushing the funding that we've received back into the community.
And what about the next one, the debt control benchmark on 24? It looks as though it's out of control since we're, failing by 59.8%.
That's because we're better, Jim. We're actually better than it by 10% debt servicing costs. We're way below that. So we're 10% benchmark.
That's just we haven't achieved the benchmark.
Yeah.
Don't want to. Who wants to pay that amount out in debt servicing costs? So debt servicing is paying debt. We're doing better by not paying. The benchmark is 10% of total revenue you spend on debt servicing.
So what it's saying is we're expecting to have this much debt, whatever that is, that will fluctuate. But actually we're not borrowing that much. We're under. Which
So the green is
actually
orange and the orange will be red.
No, I think
No.
Paul's nodding.
it's
Some of the
possible.
benchmarks are not particularly high.
Yeah. Let's not get involved in too much. 175 pages, we could be here all day. So
Now you're making me regret highlighting one.
yeah.
at that again.
Well, I'm glad you've done it because you've
Don't be
turned,
helpful.
you've turned an anxiety into a reassurance, so thank you.
Mr. Chairman,
Yes.
are we on 4.2?
Yes.
If we are, I'll move it. Risk committee.
Hang on, we've actually.
Thank you.
Have we actually moved? Mainly we have moved a second to 4.1? No, we're still on 4.1, right? So,
Oh, way past.
yeah, would someone like to.
Speed reading.
Pre-draft annual report, we received and no information. You moving, John?
No, no,
Yes.
I have a question.
Got a question? Okay, well, now's your chance.
Unfortunately, I haven't got my iPad, so I can't read what I'm talking about. I do recall, I read it a couple of times. At one point, I looked at staff levels. I can't remember what page it's on. I didn't think they portrayed the correct number, but I could be wrong in the fact that it doesn't include the museum, the gallery, the aquatic centre, the basically any other organisations we are.
It includes everyone who's on council staff, but they are spread out, as you see it, across numerous sites, including T Street now.
Right, well, if I, that number in there, I seem to neglect 134 or 137.
It is something like that. It's in note, it's in note 6, I think.
The places I just mentioned.
It includes everyone who's on staff.
FTEs.
Yeah.
Well, I don't.
It's
think that's
FTEs.
correct. Sorry, it must be correct. That's what you're saying.
That's what our payroll office is telling me. So that's what I'm going on.
Is it 30?
Is that 30th of June? So we're now end of October. So if you're looking at it now, you'll find possibly even more people on board.
I think some of the other, those ones you named, those facilities, that, you know, we've got the forms on, have a lot of part-timers. So there might be 4 people here that don't take out money that you need.
So I think you're probably looking at, so yeah, note such page 121. That's only reporting people that earn over $60,000.
Ah. So it's a complete fallacy, isn't it? It is not correct. That is not the number of people employed by the Waitaki District Council.
It does say elsewhere the number of FTEs. I'm not there yet, but
If you go to the page number, we'll know what.
I feel like, I think I told you. And the thing is, it is inaccurate, it is not correct. And I believe if it's going to be put in the thing, what staff like WTC employs, it should be specified. Correct number, how many FTEs, how many part-timers.
Okay, yeah. Sorry.
Yeah, just specified.
Yeah, it is.
It is on page 121. We received another report under 60K, another report over 60K. So add the two together. Just add that number there.
No, you don't.
I'm just quoting.
Well, I didn't have it. I still don't think it's correct.
I agree with you.
So that's for the calendar year and the number of employees. It's not FTE. So if people work part of the year, they'll have a lower remuneration. This is a mandatory disclosure.
we have to get it right.
Rules around what we disclose in it. It's not an FTE report. It's about what they from council from 1 July to 30 June.
And because it's mandatory audit, we'll pay a lot of attention to it. So if it's wrong, then it'll be correct by the time it's printed.
So yeah, 228 employees include everyone that left and everyone that arrived. Part year's remuneration, so they fall below the 60,000.
All right, thank you, Ian Hall, for covering that. So let us move on. Let's move on. So I'm back on the agenda. We're going through page 17, 18, 19. So the and as the conclusion there, just that the financial position recorded in the unaudited draft annual report may still change as a consequence of movements on annual reports of council-controlled organisations. However, they still show that council remains in a strong position to start the 2020-2021 financial year. So I think that last comment is very pertinent, very important.
May not be a measure of public perception, though.
Hopefully we have managed to relay that with some of the comments made today. and the information provided in the report. So again, can I ask for someone to move the recommendation that it be received? Councillor Hopkins, Councillor Kingan, thank you. All in favour, please say aye. Aye. Against? Carried. Did they carry? So now, Councillor McGravy, we're on to 4.2. 4.2 on page 20.
Are you entertaining questions, Mr. Chair?
Yes, indeed, on the financial report for the first quarter 2020-2021 financial year. So, so to make the point, this is the first 3 months of this new financial year. And I'm sure Mr. Hope and Mr. Wells will want to make some comments first before we invite questions. So,
It's always tricky to tell how you're doing based on one quarter, especially when the first quarter is still having quite a number of COVID-related factors, particularly applying to the result. So I think, yeah, it would be better just responding to questions about the items that are of concern or interest to you. So,
thank you, Paul. So just to note that the advice given in the first quarter, some expenses do fall in this quarter. For example, there is insurance, although it's no, but which are annual expenses, which are, so it does make this quarter not completely true to form. And it shows an operating deficit of 1.722 million against a budget deficit of 1.121. All right, so on this report, questions? While you're looking so troublesome, Councillor Driscoll. Councillor Hopkins?
Yeah, look, very quickly, reading backwards, can somebody just explain to me very quickly, the graph on page 27, which is showing the 2021 funds as being significantly under the overdraft black line. Is that correct? So,
Yes, it is.
So we've been in overdraft all of this first quarter.
We have used the BNZ facilities for the best part of the last 12 months.
Okay, although that doesn't show according to those blue and green.
Okay, if you look at the blue line,
Yeah.
it does start to dip towards the overdraft. In fact, it may not have been for the full last 12 months, and it may have kicked off in about August of last year.
Okay, no, that's fine, you've answered that. Page 26, cost of servicing this level of borrowing at 55,000 for this quarter. It was under budget. The 2021 annual plan provides for 245,000 for loan servicing. That's an annual sum, is it?
Yes, it is.
Okay, no, that's
So
fine.
the 55 for a quarter. Yeah.
Just 25, why has our total public equity gone down? 2021 is 909,863, and last year it was 911. This is million.
Yep. So the effect of that is the loss for the first quarter of 1.7 million.
Ah, okay. Just page 23. I presume the NZTA roading subsidy loss is just a timing matter, is it?
Yes, it is. I understand that. Firstly, there was work deferred from last year due to COVID-19, so that is to be picked up this year. But there was also, I'm not sure whether it was weather related or what, but so simply the late start. I mean, as I said, looking at that creditors report, the road sealing has a season when they do it. So if the revenue is spread incorrectly, which it may have been, then we've got revenue budgeted in the first 3 months that was not collectible. So over the year, it should come right.
And just 2 more very quick questions. I take it the RMA minus figure there of 60,000 is just actual against budget.
Yes, it is.
And last but not least, I was actually unable to attend the council meeting when the like to move to Ware Street was made by councillors. Were councillors told at that meeting it was going to cost 83,000 to kick the place out? It's an unbudgeted expenditure. Yes. And we're voting for it.
Yeah.
So I have my vote against recorded in the consent here, retrospectively.
Sorry, that one was the time has passed.
External funding. Anywhere, isn't it?
Well, it will
So,
return, but
No, that's fine.
I'd like to make a comment just on page 22, the impact of COVID-19. And that paragraph does include councillors received $100,000 in emergency funding to put towards additional response to the Lake Ohau village fire. So just, can you confirm, Mr. Wales, that $100,000 will come into the council's financial records as income received?
yes,
As will any further donations to the Ohau fund?
Yep. yeah, all of that is in hand. Of course, you're not going to see it until Q2 because the fire didn't happen till October. But yes, it's all in hand, and public donations, I think, have exceeded. Well, you'll know, Gary. Is it 10,000 or more than that?
Counting Meridian, over 110.
Okay, on public donations.
Oh,
That's
no,
correct.
it's
So-
okay.
So
So
just to make councillors aware that that 210,000 at the present time will come into council's accounts for next year.
Mhm.
But of course, go out again and was made as grants to the Ohau village or whatever that money is used for.
So a heads up, that'll be unbudgeted
Yes.
revenue and unbudgeted expenditure.
So that's the very point I make. Thank you, Mayor Curtin. Yeah, Councillor Percival.
I thought Mayor Curtin made it better.
I've got a question on what Jim was talking about on the expenses of Green Street, Tree Water. When that came to us, we were told that that was part would be paid for by the
yes,
fund
and
from
And it will be.
central government.
So we're still going to have a budget overspend on the expenditure side, and we'll receive additional revenue on the revenue side to fund it from the Crown.
So these again, things that are outside the annual plan.
Yeah, I appreciate
So we haven't budgeted for them, but $7 million will be coming in. Mostly
So
$7 million.
we ain't accounting really, because all it is, we're just spending money. that we've got.
Well, that's real money.
It's actually,
Once the government
it's,
now decides not to give us that money, then we'll be back in the.
it's transparency. It's, we set out our budget and so forth. We go through the year and inevitably other things come in, and it's being transparent that these things are actually, this is new, additional money that's come in or additional money that's gone out over and above the budget. It complicates things a little bit, but it still gives greater transparency overall. It's just how it gets explained, and it's when you get to the non-cash things around valuations and so on that that's where I think a lot of people do really get an eyes glazed over, and it gets more confusing.
So essentially this year may end up showing a $6 or $7 million surplus, because the Crown money is going to have to be treated as income. Yet all the spending we make is capital spending and going straight to the balance sheet. So
And most of it will happen in the next
yeah,
financial year.
Carry forward budget.
yeah.
So
So
this year's $3 million loss will miraculously become a $6 million surplus, and
Yeah.
we'll go around by saying, look how good we are.
It's a possibility. So just returning to the item, we're discussing 4.2 financial report. So just to go through it, page by page. Page 20, any comments? Page 20? Questions? Page 21. Details there of various matters.
So just a question to Ian or Paul. That creditors thing, that's just, we've got the bills that we paid now. Hence, we're using the overdraft.
Yeah.
That's what it
Yeah,
comes down to.
and because of the volume of work that's underway at the moment with the water reservoir, and it's the right time of year to start digging holes on the Alps to Ocean, various other projects, we have just about, well, it's not quite at $12 million as of today, and we will utilise LGFA funding and also government funding when that arrives to reduce that. And
Because some of that $450,000 loss on the first quarter, like parking and so on, we'll never get that money back. Well, that is essentially lost.
it's lost.
You're not. Yeah. All right, employee entitlements, short-term borrowing. Yeah. Page 22, capital expenditure. And we have a total capital of $6.972 million, which is well over the annual plan budget of 3.688. Details given there of that. We've done ahead of budget. COVID-19 mentioned before. Page 23 is the Appendix A financial report for the 3 months, showing revenue of 12.255 as opposed to budget of 12.685. And the mentioned loss of revenue due to COVID is part of the main reason for the reduction in revenue. Page 24, expenses, total 13.977 million, to 13.806.
What does the backfill mean?
So this is the use of external resources for work in the building control area and also in planning.
Just the line above it, in personnel costs, coverage under budget, plus 94. Because we are in looking at expenses, under expenses good, so we're underspent on wages and on KiwiSaver, but we also now account for recoveries against capital works as an offset of personnel costs, and our recoveries in Q1 were under budget. So hence it's effectively a loss. Thank you.
Once again, it should all straighten out by year end, but I keep saying that each year and it doesn't always.
Right. So the bottom line there is the total comprehensive revenue expense, the loss for the 3 months of 1.722 million, as opposed to a budgeted loss of 1.121 billion. So million.
Yeah.
So that's then on to the next page, 25, statement of financial position, which was asked by Councillor Hopkins before, that the public equity has gone down, decreased by 1.722 loss for the 3-month period. On to page 26, Treasury overview, where the points made, council has no funds to invest as borrower, so continuing low interest rates are a bonus for council. Raise your hand if you want to ask a question anywhere the way through. Page 27, funds, which were down below the line. 28 is where the money is coming and going from the next through until November 21. Appendix B, page 29.
Yes, Mr. Chair,
Investments.
could you report under Oamaru Waisense Trust, the last bullet point, Trust has committed to annual payments of 15,000 each during loan balance and 24,000 related to the interest-free advance. I know I think we're making one payment that matches one of those, and I can't remember which, but are they making those payments?
You need to, that council has agreed to defer those payments for this year.
Right.
Part of the assistant package.
Oh, yes.
Yeah. So to answer your question, though, Councillor, it does say that the payment of 50,000 for the interest-bearing loan balance, that's for repaying the capital of the principal of the interest-bearing loan balance, and $24,000 relating to the interest-free advance. And correct me if I'm wrong, Mr. Hope, the interest-free advance, that is the Heritage New Zealand or Heritage Fund. But the Waisense Civic Trust, due to their being good landlords and giving some of the tenants rent relief during the COVID period, they are not able to make those payments that are stated there. So council has agreed to defer for 12 months. Okay, so
Formal agreement?
No.
We haven't voted. They were formal repayments anyway. They were repayments.
I think council has formally resolved to defer them for the 12 months.
yeah. Right.
Did have the meeting with them?
Yes.
And it was a public council meeting.
All right. Basically, lift to August, it was approved by council. Okay, I'll go to page 30, internal loan balances, which show that loans have increased over the last quarter.
No, now if I can draw your attention to this, it says at the end of June. We're always a quarter behind with these things reported to you. And below that table, the summarised movements are details of by far the largest amount of the loans. So you can ask questions about those if you wish.
That's right, yes, so that is back, yes. So thank you. Internal loan balances at 30 June 2020. So yes, and there's the details. So the total advances were 5812 and there's 5740 million analysed into the different categories.
Only small difference, but why was increased borrowing at the top showing 5812 down below 5740?
Because I ignore all the rats and mice, so there are 1s and 2s and 5s, but I don't see the point in filling up another page of the.
Thank you, Mr. Wells. All right, then Appendix D, the special funds and reserve balances of June 2020. So balance of June 19 was 15.3 million, it's now 15.8 million.
Part of the reason for that increase, Mr. Chair, is because of the lottery funds that were received in June that have been put aside for spending on the gallery project.
Thank you, Mr. Wells.
And yeah, and the OHAR funds will be a new line into
New
this
category.
report. They'll be tracked separately.
Indeed. All right. And that brings us to the end of that report. Turn back to page 20. Recommendation is the Performance Audit and Risk Committee received and notes the information.
Yes, I'll move that.
Yeah, thank you.
I tried to before.
Councillor Halliday. Thank you. All in favour, please say aye.
Aye.
Against?
There we go.
Clear that carried, yep. Okay, so the last item we have to discuss is item 4.3, the Finance and Corporate Development Group update on page 33. Again, Mr. Wells, Mr. Hope, give you the opportunity to kick the board off.
I'm trying to think of how I can put some pictures or some charts in here to make it a bit more visual and interesting. I've failed so far. Yeah, you've probably seen an awful lot of myself, Ian, and the other members of the group in front of you over the last quarter. So, yeah, it's all been pretty public-facing. Council Mark, long-term plan, annual report. Happy to answer any questions. We seem to be busy enough, like everybody.
All right, Councillor Hopkins.
Yeah, well, I have two. Just the first one, under corporate, you talk about the things that have like tripped you up or consumed time to get things spent. The last sentence, however, the three-quarters process continues to progress and will have a significant and ongoing effect as the year progresses. What does that actually mean? Are you saying you need more people, or you're not going to be able to do other things? What are you telling us?
It's, as it evolves, I mean, you know, they've only announced the level of information they're going to require, that DIA is going to require to be provided to them. It is significant.
Financial information.
It's financial, it's systems information, it's asset information, it's everything, and it's got a tight deadline. So it's the problem with trying to do something over the next 6 weeks is you can't backfill it. So you just have to not do things.
So LTP stuff and stuff?
No, because it's too important. It's some of the other stuff. So, you know, sorry, it maybe might not do as much on risk as we would have hoped for, or made us progress on some of the items that may have popped up in the plan, or yeah, maybe some ideas around council mark and some improvements we could have made there. It's just, you know, it's, you have to supply it, and you have to supply it by Christmas.
Mr. Chair, there's been a real pushback from local government as a sector around the level of information that's being required, and it's certainly in excess of what anyone was expecting. You know, if 100% of council signed up for tranche 1 funding on the basis that yes, they would have to supply information, and that was done on the understanding that it was going to be a reasonable level and we should have to do some work. But I think it's surprised just about every council how extensive that is. I don't have the detail of what that is, but certainly our teams, I think, are the same before, but it is extensive and quite excessive. There has been discussions around whether some sampling of councils is done, and so rather than 67 councils all providing that high level of information, that sampling gains the same info about quite the same stress. I'm not too sure where that discussion's at, but we can only hope that it's fair and reasonable what's expected as opposed to the level that they seem to be asking for.
Yeah, thank you, Mayor Kirchhoff. I think we all understand that some of the government's demands on local government, some of the central government's demands on local government are very onerous and often not matched with funding to meet those demands or time to actually do a good job as they require. So
they have said you could use some of the funding that we've provided for other things to
do that.
But it's like it is, well, getting a resource that could actually pull that information together. You can't go externally and get that. You've got to do it internally. So
and yet using funding for one purpose to fund another purpose is what we needed to pay Paul, isn't it? So
yeah.
Mr. Chair, just picking up on that.
Yes.
My second question in a way relates to the same thing. On page 34, preparation of the LTP is well underway, good progress is being made, but then Audit New Zealand has advised that the scheduled first stage audit in November has been pushed out to February 2021, which may necessitate some rearranging of our time frame. If they're not doing their bit until February next year, how can we deliver an LTP?
They'll just need to do more work in February. So, you know, it is almost another instance of Rob competed to pay Paul. So they put resources into the central government audit rather than local government audits. They're now focused on local government audits, which means they can't do LTPs, which means they're probably going to have to steal some time from the tertiary audits, which will fall due in the first quarter of the year. If I focus on the LTPs, yeah, they've got some real challenges here.
So how will that impact out the circuit?
They've still committed to delivering the work that needs to be done for us to issue a consultation document.
There'll be some work that we actually send them via email prior to Christmas, rather than actually being on site. So we're circumventing their visit by doing that way.
So there'll be more methodology rather than time frames to make changes.
Correct.
Okay.
Mr. Power?
Firstly, just on the audit issue, the auditors are obviously suffering from COVID-19 and the impact of those on the tertiary sector and on the Crown Institute sector and state sector. So that's really where their focus is because of the sheer size of those sectors. So it's understandable to some extent. Just going back to the waters issue, DIA have indicated that as a matter of course, councils can divert up to 60,000 of their funding for RAF towards resource to assist with the provision of the data being stored. We've concluded that it's sensible to provide the data for two reasons. One is you as elected members will not have any idea where we stand otherwise relative to those others that are measured at the end of the day. And secondly, the data that is being collected is not only going to be analysed in New Zealand, but will be sent to the industry for the Scotland Commission. And clearly the Minister has taken the stance that the Scottish Commission will be a prime advisor to government as to the structure and how the data actually makes sense. So the more information that both of those assessors have at the end of the day, the more likely we are to end up with a more complete picture and a good outcome in terms of answer.
Thank you, Mr. Power, and I hope that your optimism is realised. All right, so on this paper in front of us, the Finance and Corporate Development Group questions, pages 33, 34, 35. No? Okay. So I'll ask, could I have someone to perhaps move the resolution that we receive, recommendation that we, Performance Audit and Risk Committee receives and votes the information on the Councillor Roby has ended up first. Councillor Roby, second Councillor Hopkins. All in favour, please say aye.
Aye.
Against? Be that carried. And that's the completion of our agenda matters today. So I will then declare the meeting closed and thank the members of the public who may be watching for your interest and attention, and I trust you found the proceedings of some interest. Thank you to the members of the committee for your deliberations as well. Meeting closed.